Hi students, good evening to one and all. I am Jayashree Venkatachalam, who is the Associate Professor of Sri Narayana Guru College. Today, we are just continuing with our circular flow with the 4-sector model. You had already seen my video relating to all the 2-sector and 3-sector model. This video is starting with 4-sector model. What is the speciality of 4-sector model? It is an open economy model. What do you mean by open economy, open model or open economy model? It is a model where there is a foreign trade. So, in the earlier models, especially in the 3-sector model, it was a closed model. So, this is it's an open model where there is a foreign trade. So, y is equivalent to c plus I plus g plus x minus m. As my dear students, you are very well aware, it's just a repetition. Phi stands for income, Y stands for income, C is consumption, I is investment, G is government sector. So what's the addition here? X minus M. So what is X? Export. M is import. We will explain further as we go into the details. This is the 4-sector model. Here you are aware that there are some students who might not have listened to the earlier models. So here that's why we are starting. The first sector is household sector, who are the owners of factor of production, that is land, labor, capital and organization. Second sector is the firm, who are the owners of business unit. Third sector is the government, who is helping both the household sector and the firm. You know that government is giving salary and make transfer payment to the household sector. Government is also giving subsidy and also make purchases from the firms. Now the 4th sector, that is the export and import sector, that is the foreign sector. Now I have just explained all the flows starting from the first flow to the 8th flow, so that you will be getting a full link in order to understand the 4-sector model. In the first flow, household is providing factor service to the firm. Second flow, firm is giving factor payment like wages, interest, rent and profit. In the third flow, firm produces goods and services and give these goods and services to the household sector, because the circular flow has to be completed. It will not be stopping in one part. 4th flow, household is making payment to the firm. This is where our 2-sector model ends. The 5th flow onwards, the 3rd sector model starts. In the 3-sector model, we know that government is giving salary, pension and other allowances to the household. 6th flow, government is giving subsidy and make purchases from the firm. The 7th flow, when the government is helping the household and the firm, naturally household has to pay taxes to the government. I told you, household, where yourself and myself, we all pay various type of taxes to the government. I am paying income tax. You being the students may not be earning that much income, so you are paying even GST when you buy the goods and services. Then firm also pay the tax to the government. I told you the corporate tax is one of the main tax which is paid by the firm. Corporate tax is the tax on the profit of the company. Firm also pay excise duty. Firm also pay GST to the government. Now this is the typical 4-sector model, open economy model. Here you can see that X minus M is the net export. Please understand it very clearly. X minus M is the net export. What do you mean by net export? The difference between export and import in a particular financial year. For example, India's net export is chronically negative. What is the meaning? Our imports are higher than exports for years together. That is the reason our balance of payment is having fundamental or the chronicle disequilibrium. Because oil imports are very high and it is having inelastic demand. At the same time, even after globalization, our exports are not picking up the way in which we have expected. Now the question arises, who are involved in export? Remember, even household and the firm make exports, and when they do the export, they get foreign exchange to the country. For example, as an individual, you can export. You can export Alfonso mango. You can export pickles. Similar manner, firms can also make the export. Firms are exporting textiles. Firms are exporting bicycles. Example. So whoever is doing the export, it brings foreign exchange to the country. Now, who is doing the import? Import is also done by household and the firm. When we do the import, what happens? Foreign exchange goes out of the country. For example, how the household is doing the import. Let us take the example of a doctor. Okay, he is importing MRI machine for his clinic. That is an example of import. Similarly, firms are importing capital goods, firms are importing machines, they are importing. So whoever is doing the import, foreign exchange goes out of the country. Please remember, export brings income to the country, import takes away income from the country. So if the exports are more than import, it is good for the country because export is always bringing income to the country. Yeah, I am just including here two important concept in circular flow, that is injections and leakages in the circular flow. You may ask the question, madam, why you did not say this before? See, first you have to be very comfortable with the circular flow of various models. Now you are quite comfortable, so I am explaining this. Say there are injections and leakages in circular flow. What do you mean by injection? Injection means anything which is increasing or boosting the speed of the flow, that is known as injection. Let us take the example when sometimes doctor is prescribing you injection. What's the reason? When the injection is given through your veins, it will increase your resistance power. It will boost your energy. Similarly, what are the injections in circular flow? Investment is considered as an injection. Why? When the businessman is doing the investment, that much income comes to the economy. So investment is considered as an injection. Export earning is considered as an injection. The more export happens in an economy, the more earnings will come to the country and the speed of the circular flow will be more. When there are injections, remember, there should be some leakage. What do you mean by leakage? Anything which reduces the speed of the circular flow is known as leakage. Again repeating, anything which reduces the speed of the circular flow is known as leakage. What are the leakages? Saving, taxes and import payments. Why saving is considered as a leakage? When the people are saving the money, they are not consuming. For example, I am getting 5,000 rupees income. In that, if I am consuming 4,000 rupees, that is good for the economy. But if I am saving 4,000 rupees, that much money I will not be spending. So saving is considered as a leakage in a circular flow. This will reduce the speed of circular flow. Similar thing about the taxes. When government is imposing high taxes, people's disposable income reduces. Again I am repeating, people's disposable income. You are very well aware, disposable income means income after the tax. So when the tax rate is high, automatically the disposable income of the people become less. When there is no income, automatically the speed of consumption will become less, and this will reduce the speed of the circular flow. Similarly, when we make the import payment, then the dollar or the foreign exchange moves out of the country. This will also reduce the flow of circular flow. Yes, my dear students, I have completed two-sector model of circular flow, then two-sector model of circular flow with saving and investment. Then I had made the video for three-sector model of circular flow. Now I have completed four-sector model. I am extremely thankful to you. If there are any doubts, please free to contact me and write the sincere comment, and I am requesting you to subscribe to my channel. Thank you. Have a nice day.